Oh, well, good morning, everybody. Um, Sorry, mine's not a little, not really there this morning. Good morning, everybody. Welcome to the Breakfast Club. My name's Darren Hancock. I'll be your host this morning for the ride of the century yesterday. Holy smokes. Last night was a crazy, crazy night. Lots of fun trading gold and silver last night. Wow. I think that was the single most best day of the year. And there's so many more left to go. That account I started on yesterday, or not yesterday, December 12th. It's up to $260,000 now. Yesterday it was like 50 some odd $1,000 day. It's crazy. 54, I think it was, after all those losses I took in the morning, and then turned it around. And by the time I went to bed, it was up $54,000. Crazy. It's really good. It's a demo account, but my live account did well as well, so it was all good. It was a bit rough last night. Mom had to go into the hospital, so I was up on the phone talking to her because they went back to their province in Manitoba, and they were she had some chest pain. Called me up at like 10 o'clock with some chest pain, and I was like, got her to describe it. I was like, oh no, that doesn't sound good. She had too many symptoms that would warrant an ambulance, so they had to call the ambulance. And then I'm on the phone, video phone, watching the paramedics asking questions while they do their job. And luckily her ECG was good, and I think she had some intercostal muscle pull, but her blood pressure was like 200 on something. I was like, no, that's way too high. That's emergent high. So you got to get in and get that seen to. She's got a lung infection, so it would have, it's a freaking nightmare. So anyway, we're up till 3 o'clock in the morning before I finally got the answer that they were taking her back home. We were just waiting for blood tests later. So that's a good thing. So that's one of those ones you just go, well, I'm glad it was just a muscle pull, and hope they gave her something for the blood pressure and deal with that. So anyway, my brain's a little foggy this morning, so you have to pardon me for that. I might be a little slow on the uptake this morning, so apologize for that. Let's see where we're all at. Let me just find out if we're online here first. Yeah. Okay. And there we go. Good morning, Hadi. Good morning. How are you today? I'm a little rough this morning. How's Mom? She's doing better. Thank you very much for asking. Morning, Hans. Yeah, she's doing good. I don't know how she is right now. She's probably sleeping. Hopefully she's still sleeping. I don't think they got home for like 3 hours ago, so they're not doing my brother had to drive out from Winnipeg, so that's another 40 minutes. So he didn't get home till 5:30 something. Crazy. Anyway, I'm glad we're having news that she's still around, still with us. It's all good. It's good news. Anyway, let's get to the charts. We'll be giving them a call after I'm done here. But thank you for your concern. Thanks. Appreciate it. Eddie, thanks. Where are we at? What's been going on? What have you guys done? Did you guys kill that last night? Did you see that last night? Holy smokes. Did you guys get to play in that silver gold run yesterday? Man, oh man, that was fun. Anyway, sure made up for that cock up I made yesterday morning, let me tell you. So where are we at? Let's start over here. Let me get myself grounded here. Let's start off with where are we sitting on the hourly? And we're back into there. We're going lower. So this looks like, boys and girls, this looks like, look at this on the 4 hour. I want y'all to see this. See this, we've got a run higher, change in direction, trade it all the way back up inside it. We overtook it a little bit. That could have thrown somebody off if you're going just on the 4 hour. It ran higher, then traded all the way back through that imbalance. And now it's working through this imbalance. It's traded all the way back through the BISI. Now it's trading through this BISI. So I've got 1, 2, 3 BISIs that have been traded through, right? So are you expecting higher highs or lower lows? Are you starting to get a run on all these liquidity building up behind here? Now that they've ran all these highs out, now they're going to pair it up with people that are sitting down here. So my guess, we've got 1, 2, 3, 4 levels that have been showing. This wants to go lower. This wants to go lower. This wants to go lower. This, if failed, tells me you want to go lower. We fail. So we've got 4 different areas confirming we should be going lower. We've just come back to these equal lows here. And now we're looking for a push lower. So when you're looking at this from a very simplistic kind of, look at it from a weighted perspective, like which one feels like it's a direction, like that's lower, this is now lower, this is now lower, that's lower. So clearly we're going lower. Now that we've come back and retested this, I want to see this rolling over. So now you look for an opportunity in this last 4 hours for a roll over and go lower. So as soon as it touches this low, I'm looking for, which is the previous day's low. If we want to come back up into that, go lower, you're looking for an opportunity here on the lower time frames for a reversal. We're targeting rejection block, which we've just hit already. And now we're sitting back here right on the edge of the inversion. So one hour, when it tagged these lows. So now we've got this. So from a 1 hour perspective, all you want to look for now is you're going to say, there's my little swing from here to here is my swing. Okay. See that from there to there. And I go, I'm going to pull my fib tool from low to high, high to low. And look at where we've come back. We've tagged these lows just below 50%. And see how we snapped off of that? We didn't even get to 50%. We just tagged these lows and it said, I've already accumulated all that I need there. I'm just going to come back, rebalance, drive down. So this little pocket left open, ideal. That's a real nice gap for a continuation on the downside, right? So now we've got to run to discount box. See this discount box down here on the 1 hour? And we ran schmuck all the way through it. And then we had a reaction off of it back to the lows. I would have been targeting the 50% lows to 50%, right? As a retracement. And then we're looking for continuation on the downside. So we're still looking in this area for a lower time frame confirmation that we're going lower. So let me get this off of here now. There's too much yellow going on there. So we've traded back into those equal lows. 15-minute doesn't show us a change in direction until we break here. So we broke there on the downside. We've traded back up inside it right here, and now you're looking for a short. So from there, short, and now we're looking for a a run through the mean threshold of or consequent encroachment of this wick. We can get through that wick. We're looking for further continuation on the downside on a 15-minute chart, a 5-minute chart. That's the run back to those previous lows. Market structure change here. Trade back into it right there nicely and keep coming lower. There's nothing in here except this guy right there. That's the 5-minute one. So right here. So now for the rest of you who want to try and get back in sync with the market and catch up to where the market's at, 739 is your number. 739 to 750. And what do you want to do for that? Do you want to just trade it and go short? No. You want to wait for it to break through it, come back to it, and then go lower. Unless it takes the low, then you switch over to a continuation model. But that is your go, no go box. So when you're making your boxes now, you're going to make this one called the go, no go zone. Right there. We'll make it a different color other than yellow. We'll make it I think this is green. I'll make it like a green color. And that's your go, no go zone. Because we could go higher from here. Go, no go. So you got to break the go, no go zone. So if it's a no go, it'll hit this, bounce back up, and we want to see it clear this. So you wait for market structure drift. Okay. And if it does break through that, come back, tag it. We have an extension or continuation, depending on how aggressive it gets. Okay. Does that make sense? So we put that back to 15 minutes. That's where we're sitting. That's how I break it down and dirty. So now you're just waiting for, if we do get a drive through here, remember that 50% we were talking about? If it does run up past the 50%, look for this to fill. And if we start getting through that and we close above this, then we're not going shorter for the time being. But the higher time frame suggests shorter. And just remember that hourly can come all the way back up into here to fill its SIBI, right? So that would be another, if we close through that, then we're switching it back up again. And then our upside target will be 886 to 896. Okay, so that's what you do there. So that's what I'm doing. Does that analysis make sense to you guys? Do you get that? Yes, no? Yes, it does. Okay, good, thanks. So you see how now we get down to the 1 minute zone, we've got this discount BISI, or sorry, discount SIBI right here. And that's inside our go, no go zone. And then we've got the premium. So you kind of just scan through the zone that you're in and say, what have we come down to? So we've dropped more than 50% of that whole range here. We have not broken the bull trap on the way up. We have traded through it, but we have not broken the bull trap. So here's the thing. Whenever you see the candle that makes or is so close to the SIBI, and you're looking for it to trade back into the SIBI and go higher, if it is attached to it or is so close to it like this, wait for the whole thing to break. Don't just look for, oh, it's just tagged into the SIBI, now I'm going to go higher. Here's a good example of why that came back in, tagged it, now you're expecting it to go higher. You're right in the bull trap, so it's going to reject right off of that. It does, it rejects off of it, takes you right through the downside, closes on the downside. So if you're layering in on that and it closes there, rule is get out. Because now what you're looking for is a range extension rule, right? So as it trades down and then comes all the way back into it, there's your opportunity to get out. If you're waited for this to come, if you don't, it's coming for your stop loss. If whether you're putting it here or here, this is the range extension here. So you extend that one, and then the new range is here before we reach for that one. So it goes all the way back into that zone. That's the continuation model or range extension model. And then boom. Then you look for a retracement back into the order block, wait for these lows to get taken, and then trade back into them with a wick or body. But the body has to break the low. It doesn't, just almost like another bull trap. Well, it's a bear trap now. Now we retrace all the way back up into this premium. So now we'll just see how we're going sideways here. Now we've broken this little high. We have a little fair value gap here after taking a low. We've traded through it, and see how we haven't come back into it yet. And then we traded right through the bull trap as well. Now we're coming into it. Now watch, if we take more than 50%, it's coming back into this level here. There you go, more than 50%, it's coming into that level. It does. Now you want to see it react off of there, come back up into here. And if it breaks this area here, we're waiting for the trap to let go and then come back on top of it and catch that for a run. And there's not much else to target up here. You got this one right here. That's all you got left. It's just above these highs here. Literally 775. So there's the bottom of the SIBI. Sorry, the midpoint of this SIBI. There, so you're basically inside this range here, going from box to box. We did that all in one candle already. Small little range, but you'll see how that box to box thing works. Right down to a 1 minute chart. So now I want to see it roll over and go through here, because remember our higher time frame bias is shorter. I got a really nice note from someone yesterday, thanking us for our show, just getting started in the charts, just getting started in the trading world, and thanks to you guys, we got people that are seeing the light. They're seeing how reading price action can be simple. The hardest part is, anyway, this person said, thanks so much, appreciate what you do, blah blah blah, and wanted a roadmap on how to get to a really good level of reading price. So naturally I pointed him in the direction of ICT and the core content. You got to do the core content. As much as you may hate it, you got to do the core content. He doesn't rant in his core content. He actually does do a pretty good job of describing all these different levels. So you got to do the 12-month core content for sure. And then the 2022 mentorship, you got to do that one. And then come here while you're doing that, and then watch how we're kind of applying it in real life. Told this person to go to the community channel and chat with all you guys that are in there, and we got some awesome people in there, and they all willing to help you out, man. The road that you're on a trading journey, you've got plenty of people that care about you, plenty of people that want to see you succeed. Nobody's hoarding all the money to themselves. There's plenty around for everybody. So they're sharing. So anyway, full fill now. See how the bodies are respecting this. We've had box to box. So we've gone box to box to box to box again. So this is rolling back and forth. A couple of rounds of boxing inside that range right now. Morning, Paula. Or Paulette, sorry. So that's where we are with that. Let's have a look over at that's what we got. Good morning, D. My prayers to your loved ones. Thanks, Abs. Appreciate it, bro. Appreciate it. Vitaly, good morning. My twin sister Paula says good morning also. Oh, is she with you as well? Hello, Paula. Paula and Paulette. Well, good morning. Do you sing as good as your sister? Are you a good singer like your sister? Are you getting her into trading there, Paulette? That'd be awesome. Oh, lovely. I'd love to hear your duet. That would be cool. I got to hear your sister one day, which was lovely. I wanted to hear your duet together. Do a little song. I love to hear it. She doesn't trade. Oh, that's a shame. That's okay. She's got talents. She's got singing as a talent already. If she's as good as you, she's got a good singing career going ahead. All right, let's have a look at the rest of these charts here. I'd like to get back into gold and silver because this right now we're sitting in this, it's compressing right here. So we're obviously waiting for the open for this to make a move. And I'm going to try and do this quickly because I don't want to miss out on a delicious open. Suddenly oil's taking this little run up from $58 to $61. That's not bad in the last few hours. Well, the last couple of days it's gone from 58 bucks. Change in direction, box to box. No box here. You wait for it to trade through this area. And see, it trades right to it. Gives you your rejection block. That's it. Always pay yourself at rejection blocks, my friends. Pay yourself. Pull back into 50% plus of the range. If you look at this range right here, you'll see that that was more than 50%. There's 50, there's 62% on the Beezer, and then the rollover. So let's go with, let me just remove that. So there's 62% retracement. Just pops up above here, and then we wait for the midpoint of this to let go. It drops through. There's the little tiny SIBI down here. We wait for it to trade back into that. It does right there. Then we say, does it pop through it? Yes, it does. Now we look for our range extension rule. Wait for it to trade back into it right there. See how it trades through it, trades back into it, gets our range extension. Now we look for the range, and we see this body here is traded below that. Are you watching this? This is the rule. Wait for the lowest down close candle, this which is your SIBI, trades through that on the close. As soon as it trades back into that candle or this little space here we talked about on the other one, I gave you this on the last chart. We trade through it, and then we come all the way back inside it. This was the scary one. If you're acting inside the candle, you wait for the candle to close to make your decision. Trades all the way back into it, rolls over, and now we get our continuation. So we've got our extension rule, take out the low. Range continuation rule, comes back, range continuation. And you can go right into a take profit model 3. Wait for a new reversal to happen. So that here comes back up, rejects, put your stop loss above this bull trap. Runs down, you see a new one form, put your stop loss above here. A new one forms, and then you see it break through this one. Well, you'd have to wait for it to break through here. Breaks through there. There's our reversal model. So now we're going, our reversal model is, remember I was telling you about how it dovetails? The one dovetails the other. So if we're going into our extension model, the extension model and the dovetail, make a note about this, my friends, make a note. The dovetail is when we have model 1, we'll close model 4 and initiate the new run. So in other words, the reversal model is also take profit model 3, and it's also the, hey, guess what? You're on the wrong side of this now. It's going higher. So you break through here, closes, and you go, you can get out of your trade there or wait for it to come back into the zone to retest it, which is what we're doing to go higher. So you can close your long and go, or close your short and now go long. You go long, you wait for the premium inside this box or this level to get broken. It gets broken on the upside and you go, great. Now we go switching to model 2. So you pay yourself there as it breaks through, comes back in, tag there, load back on again, look for the high, wait for the body to trade through it. And look at that on my Tibbs and on number 2. Wait for the high to get taken, it takes right there, pay yourself. Right? Now we're waiting for the next bull trap to let go. So that high there has to be broken on a close. It doesn't. It rolls over, breaks this little market structure here and just drives all the way back down. See how if you pay yourself above that high, move your stop loss to break even. If you would have entered in off of this guy, pay yourself there, move to break even, it comes back, takes you out. And it takes you out in a grand fashion. If you didn't have your stop loss and move according to those rules, that's why you got to pay yourself at that first immediate high. Just to get yourself into, well, if it's going to keep going higher, then it should not break this BISI here, or this bull trap. That's my rule anyway. You make your own rules up, but that's how I look at that. Look for a retest of the low right there. Bingo. You get it right there. Rolls over. Now I'm looking for this to go lower. That's oil. And that's, let's see what this is doing it. Ba-boom. Finally driving through. So we're, remember higher time frames we were saying going lower? Look at this. Nice. Now we've got range extension. See that? Comes back. Continuation. Boom. Look at that. See the range was extended right there. Trade below it. You trade back to it and then go lower. That's your entry. I've been telling you that on all your charts. That's it live as you can get it. Pay yourself as soon as you take these lows out. Now move to break even. So you don't want to see this run back through here now. It's already come back through there. So it's your institutional order flow entry drill. Put your stuff at break even now and let this thing run. So you've already paid yourself once. Let that ride now. So you should be at risk free. Another place to pay yourself is at the rejection block down here and the low. Take the rejection block, then move your stop loss to just below the previous one you took, and let her buck. Let her buck, my friends. Let her buck. Oh, did you get it? Did you get it? I hope you got it. I gave you the analysis all the way through this morning from 4 hours. All the logic. I gave you right down to the 1 minute entry, and I gave you multiple examples already of the continuation model. And there, look at that. This is the continuation model. It's a beautiful thing, my friends. No, I didn't take it. I'm too tired to trust my analysis this morning, but hey, there you go. Looking good. So look for a retest of this low now. And you don't want to come all the way back up to here. So I'm just looking for a retest of that low. Princess, I pray your mom is doing better. Thank you very much, Paulette. Appreciate it. She does. LOL. Out. Nice done. Nice short. Done. Good for you, Hadid. Just look for this retest of this low now. Now ask yourself, do you distrust that now? After giving you all those levels, do you distrust it? And where's the fail-safe for you? The fail-safe has to be above here. See that? Has to be above there. So you got to give that some legs to grow. There's the retest of the low. Now you want to see that roll over and go lower. But you can allow it to come all the way back up into here. I'm actually going to go short on that one. Did I get short? And you got to keep in mind now, this fails when we see this low or this close above here, then you say, well, we're going to go from box to box. And if we break that on a close, we're on the wrong side of it. That's our upside target. Oh, that's a fail. It's a fail. Now you want to see this and this. Those are the two levels. We've ran right through them both. Now there's your premium box. Now what I'm looking for here is wait for that to close. Holy smokes, that's on a tear now. Right back against everything. That's a bit unexpected, I have to admit. It is 5 minutes after the opening. So there's nothing else up here. It's got to keep running through that now. See how we've closed above everything? Now come back, find some support at this or this. Keep pushing higher. Let's wait for something clean. Otherwise, if this goes into Chopsville again, right back up into that breaker here. Wait for 10 o'clock. Is there a news release this morning? I haven't checked this morning. Now we're back through here. Come back in, use this. This is that whipsawing action you get off the opening, I suppose. The retest, now it's going to come back through here. There's the here. This was totally unexpected, but it's the open. So now let's see if this gets broken to the downside here on the close, and then we use this level as an inversion to keep pushing lower. Switch back into our short range extension model. We got to wait for this to close below here though. See on a 5-minute chart, see how that trades back up, quick rebalance all the way back down again. Institutional order flow. Still got to wait for it to close below here though. No body above here yet. This is my area of interest right now. Not this, not this, just this. We'll see if we close it up there. Still kind of choppy for me. "25 seconds. Let's see if it closes below that. Right on it. There's a rejection block. It's closing right on it. Still, this could turn around and go higher. We've got the rejection block, so if you've shorted that, pay yourself there. Or move your stop loss into a break even, plus the cost of the trade situation. I want to see some acceleration here now. If we're going to go downside, let's get down there. Let's have a look at some other ones. Let's look at Bitcoin here. Oh, well, Bitcoin went through our two objectives we were looking for yesterday. Look at that. Traded right to the second one, came back to the first one. Continuation. Gave you your run above a high right here. Fair value gap, graded response. That's a C level response right there, I think. That's just over 50%. So that would have been a C level response. D wasn't a full fill. That's a C grade run higher. And now this is a D level run. It's come all the way down below it. Hit that, your stop loss would sit right here. It did not. If you're doing a take profit model 3, it has not closed. It just came down, tagged it, and left. So your stop loss will be sitting down in here. So now that as soon as it runs through this level here, you go, great. Now you want to move your stop loss just below that level because you don't want to see that get broken to the downside, right? And there's your bear trap. So hold on to the bear trap. As soon as it breaks that high, pay yourself and move yourself into profit now. See how we want to wait for this to close. If that closes in the next 17 minutes above this level, that bull trap now becomes your area. You move your one tick below that low there. You want this to stay open for a continuation above this high. That's what I've been looking for there on the hourly in Bitcoin. Gold. Look at that reversal in gold. Holy schmuckers. Too choppy for me. Wait for this to reset. If we're going to make another little run higher, look for this drop into this box. That's your next downside target for gold. And then if it takes that, I'm looking for this little fellow right here. So it's the two downside targets for gold right now. That back at 4,600 bucks. And see how it got this high, did not break the high, bull traps holding. Do you see a reversal here? Body trades through it, trades back into it. There's your short. Takes out the low, pay yourself. Discount box, trades through it, comes all the way back up inside it. Is what we were just looking for in NQ when we're looking for that retest. And then it screwed us, did all this kind of crazy crap. Then we want to see it break through there. It does. It kind of stops right there, still trades back inside it, and then finally broke lower, which is nice. Anyway, that was gold. That's what we're looking for there. That's what this was. This area here, traded through it on a close, came back up to it, look for range extension. We extend this range, and we extend that range. Then we trade back up into the order block. We don't get that reversal there, and it continues to go lower, takes out the next one. So we've got continuation. Lovely. Okay, so let's look at silver. How's silver doing? Silver's give us the same kind of reversal. Look at that. This silver actually takes out its highs. This little cluster of highs in here takes the highs out. We get our BISI reversal. Trades back into our BISI reversal. Continues to go lower. Pay yourself at whatever swing low you deem appropriate. Now, if I was looking inside a range, I'd be looking for this guy right here on a SIBI, box-to-box trade. This is your box-to-box trade. This is take profit model 2. There's your entry. Oh, let me just draw that out again so you see it from here to here. See that? We trade through it. We'll come back to it, box to box. So pay yourself there, trades through it. See how it closes below it? Then I'm looking for this to get retested right there. Let me zoom in so you can see right there. See that? We trade below it, open below it, come back, tag it. Now you want to go short there. That's the continuation model. Or that's your extension model. Continuation's back inside the fair value gap. Does not close through it and goes lower. How sexy is that? Look at that body trades below here. Look at that last candle. Wait for it to trade 1, 2, 3, 4, 5, 6. Those are the 6 levels I told you about yesterday. So those are your 6 layered in responses. As soon as it gets here, you get 1, 2, 3. Didn't quite get 4. You got 3 out of the 6 range extension model entries for silver. So that's how that works. Beautifully, beautifully. How's our lovely little stock here doing? Okay, so that's, I don't want to see that trade back through this candle here. I want to see that come back, find some support of that, keep pushing higher. Oh my goodness. I got out of this one, 720. Not 778. It's still climbing. This is good. I kind of wish I wouldn't have waited for it to come back into here. As soon as the body breaks this candle's high, look at that retest. What a beautiful entry. This is just a real estate ETF, right? We see this swing low going, and I see that reversal, and I go, oh, sweet, on this candle here. I thought, if it just comes back in and tags that, I'm going to get it. But see how it traded above the bull trap? Then the bull trap becomes the trade, not this here. This only becomes tradable when we lose 50% of the bull trap. So we didn't. It came back, tagged the bull trap, and my buy order was in here, and it left without me. This is what I was looking for, but I didn't trade the rule. That's the rule. catch the high, catch the 1, 2, 3, the mean threshold is the actual line in the sand. You don't want to see it break that, otherwise it's coming back into here. And it just came back and said, yeah, I'll follow the rules. I'll come back, tag that, and leave. So that would have been 894 to 994. There's a whole dollar right there. So that's over 10% run since the beginning of December. In 1 month, you make 10% on your money, plus the new dividends coming soon. So you get a dividend off that as well. Crazy. See how it works in real estate? I wonder if it works in other stocks as well. Those are just ETFs, by the way. Little piggies. Nothing. I got nothing in little piggies. I'd like to see a retest of this. Before we bust that low, I'd like to see that get stop there. We've got equal lows. Stop there. Come back up. Hit this candle. And you got all the way up into the mean threshold of that candle. And I wouldn't want to see it get any lower than that. Right there. You see how we've traded through this level here on a close? Through it on a close. Then you want to see us close through this one more time. And it does right here. And literally gaps up to the opening of that candle. And yeah, we're cutting through all this shit. I'm not form fitting this. I just showed it to you on multiple charts. That's what I'm looking for right there. Gap up short. Let it, now if you're in here, you go, let it buck. I don't care if it comes back here. Let it, as soon as it gets the rejection block, pay myself, move to break even. You're zero stress trade. You got money in your pocket and you just let the rest run. This, if we're going to aim for something lower, I'm looking down here at 1468 for our little piggies. Stand by. I'm going to go say goodbye to my lovely girl. I'll be right back. Oh, Lordy. Okay, where are we at here? Morning, Shepherd. How you doing? So anyway, that's 68. Sorry, let me put that at 68. There it is. Look at that. It just came down, tagged it whilst I was gone. Look at that. That's the downside objective I'd be aiming for, from there to there. If you're going from here, objective, pay yourself here, pay yourself there, move your stop losses. Now think about this. It can come back into here, retest this whole area right here. So you can get an institutional order flow entry drill. So pay yourself at those levels. And then if you put your stop loss there, you're pretty much saying it's going to come back and grab you. So you can leave your stop loss there and hope that it doesn't run all the way through you. And tag you out. So, you know, take a big chunk of your trade off there, because if it does come back, you can either reload back on here or wait for a lower time frame, 5 minute or 1 minute for a reversal here for this to continue going lower on the next hour candle. So this right now, let this buck, let it run, because we still got another 46 minutes. So if that keeps running, just let it run. Now what I'm looking for is a close. Now I'm looking for here. This is my next level. I'm looking for 4642, 1462. No, 642. See how that's like total dyslexia. I said 642. See how I just switched the numbers inside my head? I swear that's like number dyslexia. It's weird. I don't get that with reading. My brain reads so quickly that my mouth doesn't keep up. I just see numbers 642. Anyway, live cattle. Looking for live cattle now. Hit our little carrot nicely. Lovely. Now I'm going to set my carrot. If this breaks through here on a close, so it's got to get through 23,6,425 on a close. If it gets through that, I'm going to target my little carrot down in here. Yeah, we'll target this guy here. So if it gets through here, watch it come to here. There's an immediate tag. Run through it, come back to it, run higher. Premium's broken. That level right there, I want to see that hold price now and send that higher. So this carrot will either be here or it will be down here. This looks bullish, so I want to see this hold right now. That BISI hold right now and start going higher. Aim for that target, that carrot there. And that's not because anything, I'm not hitting at a specific level. I'm just looking for a run above those highs. Cocoa, you go. Highs taken, change in direction. You don't get a chance to get in on it here, so wait. Next one's taken out. So what do I tell you? If the first one's taken and you don't trade back to it and the next one's taken, take the next one, not the last one. Take the very first one that's, the very last one that's taken, not the first one. Trades back into it right here. See all the bodies respecting that. Rolls over, goes lower. Takes out the sell side liquidity right here. There's a little tiny SIBI right here. We trade through the SIBI. And what did I tell you about the rule? You trade through it and then come back to it right there on the edge. Tag it and then go lower. There's your range extension, and then the continuation just runs right into a continuation. So beautiful run. And cocoa. I've showed it to you in stocks, cocoa, commodities, and I've showed it to you in ETFs. Government bonds were still in that weekly fair value gap. We're still banging around inside there. Dixie Chicks. What's the Dixie Chicks up to? Dixie! Didn't quite get this level down here. So if we're running into here, maybe looking for this run here. So we ran higher to our carrot. Look at that, right slice that carrot in half. Done. Carrot's done. Now I want to see us, well, then you see this change in direction right here. There's a small little SIBI. I'll stretch it out for you so you can see it. There's BISI here, I should say. Body trades through it. You come back inside the BISI. How many times are going to show you this? This is in US dollar index. So from here, you're looking for a trade back up into that. And then you're saying, I want to see it go short. Therefore, I want to see the Forex market go long from 99,194. I want to see Forex go long. So you look for Forex long. That was over here. It's flat in euro and British pound. So if this here go long, compare them up here and compare them over here. That's the level there. Now you want to see it go long right from that candle. Look at that. Goes down, goes long, and now you're back in a long position. And what is that? That's trade through the bull trap. You come back into the bull trap, which is trade through the BISI, trade back into the BISI, go lower. Trade above the bull trap, use the bull trap's mean threshold as your line in the sand. Look at that. How beautiful that is. And then you go long there at 13435. Inside this range, you pull your fib tool from high to low. If you're using the rule of internal range liquidity hunt. So you're using the internal range liquidity model to hunt your trade. So we have a bull candle, our first bull candle to the left. We trade above it. We trade back into it. Its mean threshold is my line in the sand. It comes back into it. trades higher, hits 50%. What do? Take half of our trade off, move our stop loss that was sitting down here. We're moving that into break even plus the cost of the trade, so that no longer costs us anything. And we've just taken half of our trade off. So now we are at a risk-free trade. Sit back, relax, just watch the market now. What's your upside objective in this? Well, there's one there, that swing low. If we can get through this mitigation block, this one that we run up and we fail to make a higher high, a little mitigation, then it comes back down, creates a new low, and now that breaker takes us above this high here. So this little breaker, taking out that high, would be the upside. So this mitigation block is usually not as strong as a breaker. So I would expect to see that 62% get hit, and then you'll peel off another 10% of your trade and move your stop loss that's above break even plus the cost of the trade. And now you're moving that right up into 50%. That makes sense? That's trading just British pound. Let me move my stop loss here. Hopefully that makes sense to you guys. And let me give you your Nova Scotia. So I'm still sitting in here watching this one. NQ, this is the one I'm in right now. How's our little DAX doing? Did it get up to our level? Look at that. It nailed our 3 standard deviations. Was that yesterday? I think that was yesterday. Yeah, that was yesterday morning. Hit 3 standard deviations. We were looking for 4 standard deviations, and then we see this. You see how we broke this high? You see it trade through there on a close, and it comes back inside this level, and we want to see it go lower. It trades back through it. Here's where you chop. Trades through it, so you want to see it go lower. It goes lower. Trades back above here and is held back before it hits that mean threshold. We did get a trade higher, so the rule would be I'd be out, wait for a retest of this, and then get out of your trade and wait for one of these highs or lows to get taken on the downside. So it does get taken right here on the downside. We trade back into it, so that's a short right there. So now you're going back into a short position. So that 4 standard deviations that we were looking for, the sign gave it to you already, saying unstable, was going to go lower, was going to go psych you out, go higher. As soon as it does that, remember I told you can take one or one more and then you're out. Wait for the high and low to get broken. Wait for market structure shift. That's a lot more stable and gives you an idea which direction it wants to go. So anyway, that was the DAX. Look at that seesaw, chop, 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 chop. And what's all these guys over here? This was Disney and stuff, right? Disney's still sitting there doing nothing. It's holding its own. We still want, I want to see Disney get way back down in that $80, $90 range. That would be sweet. Okay, low. Remember we were saying we didn't want to see it. It had to break up above these highs for us to get bullish on it. It went down, drops below this low. Is there a little imbalance right there? Let me stretch this out. Always stretch out your charts, you guys, and look for any imbalances. Any imbalances. They are crucial. You treat them like the same kind of rule. If it's not attached to a SIBI, so in here, this is almost like a suspension block. If there was another little one above us here, like another volume imbalance, then you have a SIBI and a volume imbalance. That would be Michael's suspension block. you treat the whole thing from this candle's open to that candle's close. If that was a gap in there, that would be your suspension. You have to take the whole thing, mark it out, and take that. So that was our C grade. You wanted to see that go higher. It went higher, took out the high. Pay yourself at that high. So if you did take this C grade entry and we went higher, you pay yourself at the rejection block and high. It came all the way back up into this imbalance, ran the high out. That next bull trap did not let you go. Held you back, bounced back down, and then took you lower. So now you've got a swing, swing, taken, and then we've got a Bissy combination right here. So you've got this area here to there. See how it trades through it? Didn't quite come back and tag it. And there's nothing else down here. So it just came short. And then do we get a retest of the low? So you wait for the lows to get taken. Now we're going looking for this C grade to fail. Right here, body trades below that low, come back into it. There's your extension model. We take the nearest low out right there, pay yourself, move to break even. You don't want to see that go any higher now. And that's the rule. That's my rule anyway. When I say the rule, it's not Michael's rule. This is just a set of rules that I've made for my 4 models that work best for me. It's not a Michaelism, so you won't find it on his charts, but that's my rule. Okay. So anyway, there's your continuation on the downside. There's the go, no go zone. So now you want to see it come back, tag the no go zone and go lower. If it breaks through the no go zone, wait for the bull trap to get broken to the upside and then start looking for a hunt back into this level that never got hit. This was the only entry you had there. If you would have just waited and followed the rules, that's the only entry you would have had for a short. Okay, let's get back to our lovely candles here. So we have a change in direction here. I'm closing my trade off. Exit trade, done. I was in at 25,731, 25,731. I was in right here. After it came back through here, I got in short here at 731, and I just got out there. We'll see a change in direction here. So this is a reversal for me. So I'm done. There's my take profit model 3. So from there to there is my live trade. And that's done. So I won't get back in again until I see this trade through here on a close. And then I'll use that for range extension, continuation, rule. We've swept the 4-hour lows now, and we're deep inside that. Remember I was telling you about my 25,400? Did I see that 25,400? We're getting close now. So we're at 10 o'clock. 10 o'clock tends to make a swing point. So if this takes a reversal now, I'm looking at time and price. And what time are we sitting on here? Number 7. This could make a swing point. So now we've traded below that low. I'll take one short back again there. And the stop loss will sit right above that high. See how it's going sideways? Now I wait for a market structure shift. This one here, stop loss sitting right there. If it takes it out, we're back through here at this level again, right? So just wait and see. Oh, it just took me. So I'm going to wait now. I'm not going to give away all my profits now. Wait for something clean. So you might have to wait till 10 o'clock or wait for a market structure shift here. Oh, where are we at here? Sorry, you guys been chatting away here. I've been talking my ear off, or your ears off here. Done. Morning. Shepherd, doing good. Thanks. I'm glad you're doing well, my friend. Maurice, what do you think about Bitcoin? What do I think about Bitcoin? Let's have a look at Bitcoin again. So remember yesterday, Maurice, we were pointing for these objectives. This is an institutional order flow entry journal on the hourly. What time frame do you want me to look at there, Maurice? You thought it was never going to happen. That's why you're the pro. Just come down to my first fair value gap of the year, man. That's what I want to see as a downside. What time do you want? 15-minute, Maurice? Thank you, sir. Okay, your 15-minute. Let's look at your 15-minute here. So you see this SIBI right here? You got to box these out in your chart. Box them out, and don't let anyone ever tell you, and Michael, like Michael's told you in the past, we cut through candles. We cut through candles. Take your swing points. Oh, buzzing off here. 7:10 a.m. Sorry. So here's your, take your SIBIs, your BISIs. So as soon as you see a low taken, draw this out right away on your chart. See this consolidation here? You want to see it trade through it. And then you want to see it come back and just tag it right there. It closes through it, come back, tag it. That's a continuation of CAM Model 1 entry. Runs lower. As soon as you see this starting to form, close off your short, because that lot's been taken and it's starting to show you that, hey, I might want to reverse here. Body trades through it, you trade back into it. That's definitely a close off on your short. Now you're going to go long inside this range. And I'm looking for 50% or more of the range. So if you're doing your take profit model 1, I tell you, that's the safest one to take. As soon as you enter in right here on your long, you got your leveled in 1, 2, 3 levels. You level in on them, and then you start to go long. And then you take that long, your stop loss sits down here, and you're looking for a 50% to 62% run on this trade, all the way up to 70, 72, or this right up here, this reversal. See how that reversal happened here? So this is a box to create a box. So here's the take profit model 3 as well. Let me just finish this one first, and I'll show you how this all unfolded and all the take profit models that are in here. So there's your change in direction or reversal. You enter in 1, 2, 3. You're all scaled in nice and tight. Stop loss sitting down here. You don't want to lose the mean threshold of this candle on a close, right? So it comes all the way back down into it right here. You start to trade up. Now you say, if I'm just trading internal range liquidity, I'm looking for box to box inside the small range here, right? So, oh, sorry, you traded in here, you went all the way back up, and you see a new box forming above these little highs. So it gets 50%, pay yourself at 50%. Take half your trade off, move your stop loss now into break even. So you're going to move right into here. Okay, so these guys are in profit, and you're moving above them, keeping everything locked in. So your profit, half of it, the other half is sitting in profit as well. And then as soon as it hits 62%, you move take 10% off, move 40% of it right into here. It hits that 62. So now your 40% of your trade is left. Okay, inside internal range liquidity. Then it turns back on you, tags you out at the 40%, and then look what it did. It ran all the way back down to the bottom here one more time. Now you can load in again. I used to call this buffering. You can buffer this trade and say, I'm going to take the same trade long again. Take it long, and then you get 50%. Take half your trade off, move the rest of it back into profit again. So you load, stock it back in, or layer it all in, get back to 50%, pay yourself half, move your stop loss. It comes back, hits you again. You say, okay, well, if it layers in again, I will layer in again, do the same thing, 50%. Does it hit 62? Yes, it does. Hit 62, comes back. So all of that's profit, profit, takes you out, load in again, profit, profit, takes you out at 50%. Then you load in again, and then it finally pops through, and you go, I'm out. That's now broken to the downside. I'm expecting to see the rejection block get hit. It does. Then you say, as soon as this level right here gets traded, because this low has been taken, I see this reversal. As soon as I see a body get above here. So now what's interesting for me is this box here, right? As soon as it closes above that, I'm going to use that as support. So it goes above, and I go, sweet. Make sure the bull trap, I get through this bull trap, comes back inside. That's a long. See how it closed below? That might have been enough to throw you off, but you got a little busy here. A retest. Michael likes looking for these. I like looking for that guy. Comes back into Michael's area beautifully. He would have caught that as a nice little long, perhaps. And you're in your big monster long. So high gets broken to the upside with a bull candle. Now you want to see a retest of this high. If it doesn't, then you wait for retests of these highs. It runs through them. You get your first presentation fair value gap on Wednesday. Body breaks through it. We break through the high. What do we do now? The next, if you've missed your entry in here and it comes back, finally gives you your entry here for a continuation. As soon as it breaks that high, pay yourself and move your stop loss to break even. And now you're in a stress-free trade. And let her buck, man, let her buck. I would take this and I would go like this. And I would say, there's my one standard deviation. Right there. And look at how that body respects that. Just bang right on the one standard deviation, right? Where's two standard deviations? Burr, 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 burr. There's 2.5. There's 2. There's one standard deviation. Pay yourself. Move yourself to break even. And now wait for it to get to 2 standard deviations. And then move your stop loss to 1. Pay yourself at 2. Pay yourself at 2.5. And then look for further upside. So for me, I would wait for a reversal occurring on a 15-minute chart. So you're looking for any one of these things where it pops through, comes back into it. That's a take profit model 3, move to the sidelines. You can do that on a 5-minute chart or wait for on a 15, but just realize on a 15-minute chart, you may get a huge reversal and miss out lots of profits. So once you're in profit now and you're zero stress, which is what that would be off of here, once it takes that high, move to stress-free, pay yourself. You got some money in your pocket. You're stress-free and let it buck. And don't worry if it comes back and takes you out, then runs higher, wait for a new setup. Don't freak out. People get so upset when it takes off and they go, I knew it was going to go there. It's like, look, man, you got paid. It's not like it's never going to give you an opportunity at in again, right? So anyway, that's my analysis for you there, Maurice, of your Bitcoin. But at least that's what I'm looking for. Meanwhile, back at the ranch, the turn happened. Do you see that? That's why I got out of the trade, got back in it. Like, no, it failed. So you got to wait for a structure break. So there's the structure break right there, right above our first candles to the left. And I was too busy yakking. That's the long right there. Next bull trap. That's a long right there. Targeting this bull trap or this premium BISI up here. That's a long right there. So there's three opportunities here. One here, one here, one here for that objective. Oh, sorry. No, this objective here. I forgot. I didn't see that too much overlapping crud there. What is all this yellow? Is it all the hourly stuff? What is that? Let me see what this is. What the hell is all that long? Let me get rid of all that. This is all my goodies on the side here. So looking at this candle here, and right there, I'm looking for it go up a little higher. 706, my friend. 706 to 716. 706 to 716. $706 to $716. Mm-hmm. So change in direction. Body's traded below it here, traded through the high. So now that's not acting the way I want it to act. Move to the sidelines and wait. I still think we got one more. 706, 716. That's right into that little zone right there. That's perfect. See it come back up in there, and then I'm looking for a reversal in here for a continuation on the downside, my friends. You're very welcome, Maurice. You're very welcome, my friend. Still looking for them carrots and silver. Stand by. Let me get over there. Let me look. Let me look. We have a swing occurring at 10 o'clock. Watch. See how this one, I'm going to draw these out so you guys can see this. So this is what you got to kind of practice. So you see how this, there's one right there as well. I've died every day waiting for you. Okay, so then you go here. Then we go here. These are the key levels that I look for every time I'm and I go breaker. That is the breaker. The breaker. All right. So what you're looking for is, you see how we've got our lows have been taken here, and then you want to see a retest of this right here and go lower. So it comes back up. This fair value gap, you don't want to see it get filled, and you don't want to see it get closed through. It gets filled, and you go, okay, we're tapping this. I want to see it go lower. It goes lower. Rejection block. Pay yourself at rejection blocks. It doesn't give you a range extension. That's why we always pay ourselves at rejection blocks. There's always that backup thing that saves your ass. The rules are there. If it fails, you'll know why. If it starts to trade back, you'll say to yourself, I don't want to see it. It's already filled this. Why would it want to come all the way back up in here again? No, 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 no. You can tag the edge of it or the consequent encroachment. I don't want to see it go through there. And it closes. You go, I don't like the looks of that. But let's just follow the rules now. Because it wasn't start on, I don't like the looks of it. It's now I see this SIBI forming here, and I see another SIBI forming there. Then that closes through it. And you go, it's closed through my reversal. It's closed through this. These are all failing. What does that tell you? If that's failing, that's failing, and that's failing, and then we've traded through this one as well. So you've got 1, 2, 3, 4, 5 different levels that have said, I'm failing. So what does that tell you? Just because I want to run back inside this cluster of crap again to gather more Shorts? Hell no. It's got some momentum, right? So as soon as you see this reversal and you see a body close through it, you think, great, now I'm on the wrong side of this to go short. I've got to get back in sync with the market. If I get a retest of this one, let's say this one didn't go through here, retest this, then you can go long inside that range and you're targeting this up here, right? And it hits that right there. So you go, okay, it literally runs through the next one. You don't get the entry here. It runs through the next one. You say, great. Now if it retests here before it's already hit the premium, so you're already in the premium range, you got to say to yourself, do I have to wait for a market, for a continuation model, or am I going to wait for this to reverse and go back down? You're already in the premium portion of this range. So trying to take a run here now for running higher, even though we can see, we're just going to pretend it's sitting right there right now, right there. You see that? So you've traded up, you're in the premium and you've hit the premium box. Now you say to yourself, this could reverse and come back lower on us because we're bearish. So what I'm going to wait for now is for something to show me that it's got more strength, and more strength is getting through this bull trap. Do you want to take a trade that close to a bull trap and it reverse on you? No. And you're already in a premium. So what you want to wait for is a new leg to continue. So new leg confirmation is a breakthrough here and a close. Takes out the high, takes up with a wick, no body. And then we have a fair value gap forming above an old high. What do I tell you about fair value gaps and the rules about fair value gaps? You have the graded response. A plus is just a leave. A is just a tag in this all the way down to a B level, which is the consequent encroachment of the BISI. That's a B trade, right? That's the grade level B. Once you break that high, we want to see this, and I want to see that stay open. So that's a B trade. So entry 1, entry 2, entry 3 is C, entry 4 is D. Your stop loss will sit just below, one tick below here or one tick below here. If it runs higher, takes that high, pay yourself, move to break even, let your thing run. You see this reversal happening right here. If a body trades through that on a close, and it does, so now I'm looking at this. I close that out because I'm using a take profit model 3. As soon as that SIBI gets, or BISI gets traded through, it does move to the sidelines. Now if it runs higher, who cares? Wait for that high to get taken because that's the bull trap. See how we've got a little fair value gap forming here and here? This one wants to see strength. This one wants to see strength, tab it and go higher. It broke. So now you want to see the strength is in the short, and you don't want to see this one close above that because now the strength is in the long because we've taken out a little low here. So you see how they can overlap theories? So you got to be prepared to say, how you getting strength and are you getting weakness? Right now, this is slightly bearish until it breaks that. This one confirms bearish. That one fills but doesn't close. Bearish. So far I got positive bearish, slightly positive bearish, or sorry, slightly negative bearish, and slightly negative bullish. Sorry. Bull candle, BISI fails, gives me a bearish indication. The SIBI, after taking that low, starting to fail, gives me a bearish indication. So I've got just that information alone to me tells me it's more bearish than it is bullish right now. Right now, and quite easily this mean threshold could hold and slam it up higher. That's the welcome to the overlapping continuation or overlapping data point. So what you want to see is it close below here and then tag that. So here's our change in direction. We're on the horse right now. We're calling it as it's happening. I want to see this close here in the next 46 seconds. Come back and tag that. Then you take your fib tool and you pull either this one to here and you say, what's my target? If I'm using my take profit model 1, my target's there 50%. And you're entering in short here, stop losses here, first profits here to move to break even plus the cost of your trade, and there's your profit, first profit. Does that make sense? That's for silver. That's where silver's sitting for me right now. That's how I'm interpreting it. So that's what my expectation is right here. The moment we close below there, and see how we literally closed and opened on it, but we're definitely below here now, and we're definitely below here, so it feels more bearish for me. And where's my first target? If I'm going to run into a discount array, you got to get a body through here though. We just got wicks down there. See how we literally opened on the close, but not the low. No bodies down here yet. This could still go sideways and then run higher. The rule for me, my rule is a solid rule is it must close below that if you want a market structure, a little market structure shift, because that little swing point there and swing point there, breaker takes that, breaks that little high, sends it higher, change in direction, supported. This new breaker here that takes out this low, supported, lower. So watch right here now. See how that body here closes below that low? Good. It opens literally on the low. Now we're looking for it to go lower. That's the entry right there. Close. See how tiny that is? It's a small little entry, and we're waiting for that 50% to occur. That's just a 1 minute chart, but that's no different than any other chart you're looking at, my friends. No different than any other chart. Whether that's all those other assets I've showed you this morning. This is doing it live. And how, see, we're coming back and retesting this again. So now what you want to see is, I don't want to see us come any lower or higher than this mean threshold of this candle. So I want to see that take a dive down now, like get some speed here. So that's when you hear Michael say, I want to see speed. He's already seen a data point up here get hit. There's no other reason it needs to go up any higher. I want to see speed here now. In his head, he's already seen what he wants to see, and he wants to see just pure acceleration here. That's what I'm looking for here. And keep your eye right here. Always, always look for, where does it fail for me? See that? We're through that mean threshold already with the wick. Watch this level. We've got a new low taken, and we've got a new change in direction. So if we close in the next 22 seconds above here, forget the 50%. You want to go higher. And this is not acting the way you want it to act, right? We wanted to see accelerate to 50. So the retest is this whole candle. My stop loss would be sitting one tick above here. And if it's sitting inside the bull, you have to be above the whole BISI as well. So you'd have to be right up here, right above that candle. So we're still, everything's still good. We didn't get a close above here. We wicked through here, no body above there. And now we're still heading for our 50%. So wait and see. That's why you don't act on the candle that's moving. You wait for it to close, make your decision. It's no different than if the candle was sitting there and I go, what's my next move? What's my next move? What's my next move? What's my next move? After each candle's finished forming, right? Thank you for the details. This helps a lot to understand the structure you're seeing. Does it make sense though? I don't want to make it look like I'm form fitting. I'm just teaching you the same thing over and over every single day. I'm trying to show you this exact same thing, right? And I'm trying to show you on all the different asset classes to show you this is an algorithm running the market. It is not buyers and sellers. It is not volume, and it's none of that shit. It is algorithmic delivery. And you can't see this kind of level of precision on a 1 minute chart in all of the assets and believe that it's buyers and sellers bullshit. It's not. There's buyers and sellers, yeah, but they're not driving the market, man. That has nothing to do with volume. Have you ever seen me look at a volume indicator, a MACD, a stochastic? None of that shit, right? And look, we're calling for this 50% right here. So as soon as it hits 50, like that close, if you're really skittish, pull your stop loss from your entry point here. Remember, you scaled in here all the way up. Here's your entry. Here's your premium box right there, all the way up to there. You scaled in all 3 entries there. 1, 2, 3. You're scaled in. Stop loss is sitting here. As soon as it takes out that low, move to break even. Or if you're doing your take profit model 1, there's your first one, 50%. Take half your trade off there. Now you're moving into profit. Everything here is now moving above. You can sit it right in here. As soon as it hits 62%, you're going to go take another portion of your trade off and move your stop loss to 50%. So this is a risk-free trade for you right now, and you've just taken off half your trade. Internal range liquidity hunt. That's my internal range reversal model, internal range liquidity model. And now you're hunting for discount. If you're using take profit model 2, box to box trade, there's box to box 1, box 2. That one does not count. It is above 50%, so I count this one. So you're looking for here to here as a take profit model 2. 50% of your trade is off if you're taking take profit model 1. You're zero stress. It's a zero stress trade right now, you guys. And I gave it to you right here. As that's forming, that's our point. Next one, next one. 60 to 72% optimum trade entry reversal, as Michael calls them, right inside our zones. So think your stop loss is now sitting just above your break even, your entry point, right? So when you see this break to the upside, take profit model 3, you're out. See how they all kind of overlap each other and they dovetail each other? And it says, that's my safeguard, right? Oh, there's one right here. You see that? See how the bodies are respecting it? Right here. Oh, we're above it already. I'd be out. That's it. It changed directions. I'm out. You got 50%. Take the rest of it off there. And if it continues to go lower, who cares? Who cares? You just grab some internal range liquidity. You're stuck in the middle of the range. So you can argue up or down. It's already traded through that level right there on a close. Done. Move to the sidelines. Have a nice day. That's my rule. That's a take profit model 3. If you're sticking to take profit model 1, you're still in. You're still good. We have not come back and taken you out. 100%. 100%. I agree. 100%. Right? Now it's just come back down. Swept the low one more time. We still have not got our take profit model 2. And we have not got 62% for a take profit model 1. But see how that take profit model 1 is a great way to save your ass. If this totally turns and goes high upstream and you were on the wrong side of this, some of the other people are saying, you're nuts thinking that's going short. I'm not going short like way down here. I'm trading internal range liquidity. And that's all I want. I'm grabbing cash here because if that turns, my take profit model 1 saves my ass. And then I say, if it breaks here, I just switch right back into my range extension model and then my continuation model. So I've got 4 models that trade internal range liquidity, reversals, range extension, range continuation. That's it. And all the rules that follow them. And you see why? We've traded through it, wicked all the way back down, wait for it to close. It's still sitting in it. And you go, boom, now it's just ripped right through this next one. And it's now closed above there. More continuation for a reversal. You see that? And you paid yourself right there at 50%. Close out your trade right there. You're done and dusted. So even if you're on the wrong side of this and this goes higher, you got some money out of the market, even trading the wrong direction. How's that? How do you find that, my friends? And 14 people in here to see it. Hit the thumbs up if you like what we're doing. If you're new to our channel, like and subscribe. We're here for you. We're here for you. Every day, every day. See how I've closed above that and you've closed above this one. Now you're closing above this one. And it would have tagged you out. Had you just followed the 50% pay, move your stop loss to break even, it just came back and tagged you out. But see how it gave you the early signs right here that it's changing direction on you? Now I want to see this bull trap let go. So now you just wait. You've traded, got some internal range liquidity. Now you just wait for the new setup because we're in the premium portion of this range. If you did not get long off of here, it would have taken your stop loss anyway. If you would have said, okay, I'm out, I'm going long, and it came back, took your stop loss, and then went higher. That's the shit, man. That's the trouble with sometimes you take a loss. Accept it. So you wait, and then it goes higher. You say, you curse it and say, damn you went the wrong. I knew it was going higher. That's fine. Don't beat yourself up. Keep your brain positive. Ones and zeros, man. Ones and zeros. That's what you guys got to think about. Ones and zeros. Just stop trading like a human, trade like a robot. That's what's running it. That's what's an algorithm's running it. Then treat it like an algorithm. Humans aren't setting this up. There's an algorithm running that. It doesn't care about your emotions. Now wait for this level to get broken to the upside. So watch. Now if this gets broken to the upside, now there's the run on liquidity. So we've already got our range extension. So now we're looking for continuation. What I want to see is either a nice little fair value gap form above here. And then trade back into this candle. If we get a wick, then I'm looking for this to provide support. If this fails, then we're coming back inside this range and look for this level that never got hit. Remember that right there was the only one that got hit. This one didn't. That one didn't. Oh yes, it did right there. Doop. Just came down and tagged it right there. It opened above it, tagged it, and then went higher. I missed that one, but that's definitely the one candle trades through one, and then literally the next candle goes, I'm opening above two, then look for two, tagged it, and then went higher. Hit the premium. So now whether or not that's in a discount portion, let me just see. And this is how you got to be real quick with your analysis. Look at that. Literally above 50, tagged the 50, and then went higher. Yeah, that's a real dodgy one right there. You say, well, it's got to be discount for me, 50%, and literally like one tick below into the discount and ran higher. Funny. All right, so closed above the mean threshold, just almost tagged the mean threshold, went higher. So now we're waiting for a body to close above here. It did. Now we want to see it tag it and go higher. That's range continuation model. So now I don't want to see more than 50% of this get closed below. If it does, then look for a retest of that mark right there. Oh, I'm so tired. Yeah, Hadi. I like the way Hadi's watching the markets now. Wouldn't that be great? Hey, look at that. $260,000 since December 15th or December 12th. $250,000. Jeepers. Wouldn't you just love that kind of cash, eh? There's the retest, and away we go. As soon as it takes that high, there's the rule. Pay yourself. And I'd still keep my stop loss one tick below this low, because we may still get a little run here. Yes, and we're coming up for 11 a.m. Good call, Hadi. Good call. And we've got the macros about to begin in the next 7 minutes. There's the tap. You don't want to see it go lower than that. It starts closing below there. Now watch the close. See how the close is sitting right on it? Wick, I don't want to see any more runs down through that. See how we've closed below this level here? That gives you a reversal situation, and now we're popping through here. So when you saw that come down and tag it, I want to see it close back above here. It didn't. So now we've got to change of direction. So that's all you'd get for continuation model right there. Small, but it happens. That's all you get. All you get right there. Doot, doot. And then it says, now I want to change direction. Right there. Come back and tag it. Let's wait and see where this candle closes. It can come back into this SIBI, BISI overlap. So this BISI has to hold price to send it higher. This one here has to hold price to send it higher. Because now we've broken through it. We've coming back into it to find some support and go higher. If we start to close below here, below here, below here, below here, what does that tell you? That tells you there's more weakness, right? And we're digging right inside that old bull trap that we broke to the upside. We've come back into the bull trap, and we broke through this next bull trap, and we've come back, and the bodies are respecting that mean threshold. We just dropped below it right there. So here's a retest. Retest. So now I've got volume imbalance, volume imbalance. That one's been hit. This one's been hit. We'll see now where we sit. Because now I've got slightly bullish still. This is still holding price to go higher. And bearish, bearish. Two little bears against the big bull. And if this is slowly starts to roll over here now, then you know I'm watching the fight between the little guys and the big guy. And the little guys are so far are winning. Now look for a run back inside here to 50% and say what's sitting around 50%. %50 is this BISI. There's that little SIBI there that never got hit. This little SIBI did get hit, but the bottom half of it didn't. And we still have this one down here that didn't get hit. This you have to include. This is a suspension, Michael's suspension block. Let me show you this suspension block. This big BISI, you want to see that hold price and drive through these little guys here. Send it higher. This is Michael's suspension block. It starts way down here because there's a small little imbalance down here. All the way up to there. You got this little piece here, this piece, and that little piece. All that is considered a suspension block. See how you opened up above it, tapped the suspension block, and then went higher. That's his suspension block. At least that's what I think it is. If he was watching this, he'd go, "Yeah, you don't know what the hell you're talking about. You're full of shit. Everybody's stealing my ideas." I love the guy. I love him. I love him. But he can rant, man. He can blame everybody. You guys don't know my stuff. He teaches it all these years and doesn't expect people to get really good at it. I don't know. So we see how we're kind of banging around in here. The war has now begun between, when I look at this as a video game to me now, I treat this like a video game. I've got the good guys. If I want to say this, I want to send it higher. I got the good guys against the bad guys trying to hold me back. Or I say, these are the good guys and they're trying to work on the bad guys. Whatever direction you want to bias it in. But that's the video game right now. This lot against those two. And it's too choppy right now, and we're getting up into the macro time. So macro would be this one broken to the downside as a nice support. So you take any fair value gap that occurred at or just before the macro and look for that as support for your overall bias. And look at where we're going. Are we getting into the 400s? Oh my goodness, did somebody call the 400s? Has he been calling 400s for days now? And here we go, right into our first fair value gap of the year. Yeah, you damn right you ring that bell, my friend. Ring that bell. There's the 400s. I told you it was coming there. And we're looking right here is my first fair value gap of the year at 480. Just give it a kiss so I can drop the mic. 480. Come on. Bing. Mic drop. Mic drop, my friends. There you go. There you go. Delicious and nutritious, my friends. That's like Derek's bees. That's like pure honey. Pure freaking honey. I'm going to show you my chart. Not because I want to rub it in, but because look at this. This is where I've been calling for. I put that in my chart over there, and look at that. We're smacking it now, boy. I'm loving it. Yes, indeed. There it is, right at 480. Dun, dun, dun. The final push through will be 455. Right here. This will be the new day, one of the new day opening gaps. And then after that, you're looking for 435 to 395. And where were we at? What was I on there? I can't remember what were we trading there? Was it silver? Yeah, it was silver, wasn't it? Silver and gold. See how that these little guys are beating these guys up? They finally ran through them, and look at this retest. Bing, hits the retest. That's your short. Discount box, box to box. You trade through the box, to the box, box to box, box right there, to box. Entry, exit. Internal range liquidity hunt, done. Now you want to wait for this to break on the downside. Wait for 91.18. Sorry, not 91.18. You're looking for 91.11.5 to break on the downside. Wait for market structure shift. And then you're targeting these two areas down here that didn't get hit. You're gonna come back for those. Once we break market structure, look for those two. Did Michael call this yesterday in his, anybody who watched Michael's stuff? I just want to know if he had the same idea I did, that we weren't looking for a higher. We were looking for a retest down in here. Oh, sorry, you're not even looking at my area here. I'm looking for that, what's this one? It's a 1 minute, 4 hour chart. Oh, this is silver. Jeepers. Did Michael call this short? I just want to know if he's been calling the same thing I'm calling. I don't know what his, I haven't watched his latest videos, so I don't know if he's been calling the same thing I have. Your reversal here on NQ, you see how we look for this level down here, the discount box? And it's no different. I tell it to you every freaking day, you guys. This is my rule. If the discount box gets traded through, we're looking for a range extension model. So you go from premium to discount, box to box, trade through box to box. You trade through it and you hit it. pay yourself. Now, the moment it closes below it, you get in short. As soon as it comes back and tags it, now you can get short. So you're short to here, and you go, now I'm looking for proof that I want to run for this next range low is here. There's my range extension model. I extend below it. Now I'm looking for my range continuation model. If I retest this, once I trade below it right there and I retest it, I'm going my range continuation. There's my retest and I go longer. There's my continuation. All four models are right there. Reversal model, internal range liquidity hunt model, box to box, and then the continuation right there. Continuation or extension model, then the continuation model. Perfect. All four of them, all in there, and perfect data points. You want to talk about precision, my friends? I give you ThetaWaveTrader and the 4 trade models. That's when it's acting the way you want it to act. That's when the markets are acting cleanly and we don't get beat up in the markets we had yesterday morning. That's the kind of clean stuff you're looking for. Does that make sense? Does that make sense to you guys? And I'm not form fitting it. I teach the same thing every freaking day. Just stick around here long enough. You'll see Hadi sees it. He sees it. He trades it. And you look at Hadi and you go, man, he's successful. He's following the damn rules. Follow the penguin. Follow the penguin. Follow the rules. There's 11 o'clock. Let's wait for this to reverse here. Look for the internal range liquidity hunt. Watch. Start marking it out on your chart, you guys. This could be a run, 50% of this. Wait for the setup. Don't chase it. Don't go crazy. Just wait. All it did was come back, tag this. If it rolls over and keeps pushing, I'd be looking for this. If that stops, I'm looking for this. I'm looking for 349 and 431, which is the bottom of this right here. If that doesn't hold, then we're going back into a range liquidity hunt. We'll come back to here. Looking for a retest of this to 62%. Look where 62% puts us, right back into our go, no go zone. Look at that, 62% puts you right on that low. Inside that, so we have overlapping confluences that support. If we get this closed above here, I want to see that run. Your stop loss will sit here, and as soon as you get to 50%, take half your trade off, so on and so forth. Rinse and repeat, my friends. Rinse and repeat. Now, if this just simply comes back into here, rolls over and goes lower, look for that next price leg lower, and look for that this little day first or new day opening gap. He's cautious, but keeps saying in time we're heading out to take out the equal highs in NQ. I've missed a video or two, but he's preaching cautious before because of the tariff ruling and dissension. Yeah. If you just stay on the horse and follow the direction of where the market's going right now, and as soon as you see, like I explained this morning, all the proof that we're going shorter this morning, go back over the video this morning and how I was talking about how all that evidence from the 4 hour all the way down to the 1 hour gave us the short decision this morning. And the target, the 400s, and that first presentation fair value gap, it's nailed it. I didn't give you the first presentation fair value gap. I've been calling that for a couple of days now. Well, actually, since last week. I like that low. And we finally got it today. Finally got it today. So far, see how this is coming up, not clearing it, and now you want to see if it gets back below this low, comes back, finds some support at this. Now you want to say, am I going to juice the last piece of orange, juice out of the orange here? Keep your stop loss tight, leverage, because 11 o'clock you typically will see a run on the previous range that was created between 9 and 10:30. So that would be this significant high here. Don't chase it. Look for the 5-minute. Wait for that. 25,360. $25,360. What are you looking for down there, Hadi? What's $25,360? I don't know what your 25,360 is there, Hadi. What are you targeting back there? Is it a 15-minute or a 5-minute level? I can see a 4-hour. Get through that first fair value gap there, or that first year's presentation fair value gap. If we get through that, we're looking for 395 to 429, 430. And if we get through, man, if we get through if we get through 390 on a close, 338. I got 338 to 347. But that's away. That's a lot of PD arrays away yet. It's a lot. Looking for that 15-minute fair value. Yep. Okay. Fair enough. Bitcoin upgrade process. How did Bitcoin do? Oh, looky. We hit our objective. Oh, that hit that earlier, right? Now you want to see that drive to this next one. We don't have a reversal going on here yet. We've come back. We've retested this old high, went higher, retraced. Now you just got this, as our retail friends would say, it's a bull flag. It's a bull flag. We're just waiting for more buyers to come in and buy this so we can send it higher. We're just waiting for more volume. Wait, the stochastic hasn't read 32.1 or whatever the RSI is. I don't know. Sorry, I don't want to mock all you people that are still using that stuff, but you really are wasting your time. We have added no indicators other than the ones that we've created ourselves. And they're just like simple data point levels. Look at that. First presentation. Look at that first one. Lovely. Anyway. Looking good, man. Let it run. Let it run. Start hunting for this up here. Let it go. Let it go. How's our gold doing? We have a fair value gap reversal. We've traded above it and above the candle to the left, which happens to be inside this level as well. Trades above it. We come back into that candle and extend higher. Next bull trap. We take out the bull trap on a close, and then we come back to the bull trap. Next range extension takes it higher. Bull trap. Trades above it. You come back to it right here. and you go higher, pay yourself above the high. You have a small little reversal right here. You stretch it out, you'll see it. Always stretch out your charts, my friends. Always stretch out your charts. And then it trades through it. So you go gotta wait for a structure shift. Trades through it right here. Trades back to it right there. Get back inside this range. Pull your fib tool from high to low. 50, 62, 70%, blah, blah, blah. Pay yourself on the way down. Internal range liquidity hunt. Then you see a reversal. Get out of your trade. Comes back to it. Does not give you an opportunity to get in on this one here. Trades above it. You're too premium here. You got to wait. Change your of direction. Trades through it right here. Did not give you an opportunity to get in on it. You're in too much of a discount portion already. Wait for this to close below it. It does right there. Does not give you an opportunity to get in on it. So you got to wait. There's 50% of that range or that order block. Starts to trade back through it. Closes above here. Wicks down. You can look at that as a long internal range liquidity here, looking for this upside objective here, or 50%. There's 50% from there to there. Pay yourself into. That's why that internal range liquidity hunt for take profit model 1. Save your ass if you're wrong. Look at this, just so you know. If you took this trade inside here, I'm using that from there to there. You got long right there. Your stop loss was sitting here. It squeezed you and then went to 50%. Take half your trade off, moves your stop loss to break even. Then it comes down and takes your stop loss out. You got half your money, got a little bit of profit on the internal range liquidity. It came all the way back down and would have taken you out anyway. And you go, ooh, am I happy that I got my internal range take profit model 1, always saving your ass. You didn't get model 2. You didn't get the reversal, model 3. But take profit model 1, I tell you, she's a sweetheart and will pay you. There's nothing in here. Wait for a market structure to break to the upside. It does find support at this. As soon as it takes that high, pay yourself. It pays you right there. Move your stop loss to break even. Comes back, takes you out. Simple rule. Right? Simple rule. Pay yourself at the nearest high. You're already up in the premium box already, and now it's being respected. Wicks go through into the rejection block. Now you want to see if it pops through here, takes out this premium box, and sends her higher. It's almost nap time. Box to box strategy, but we'll wait for a pullback. Quick check in. Talk to you later. All right. Take care, Derek, buddy. Good to see you again, man. Stretch it out. Stretch it out. Do you see the imbalance sitting right here? Look at that. Body's respecting that right to the edge of it. Wicks do a little bit of damage, but they don't take out the low. We did not close below here. You ran right back up. See what I mean by pay yourself at rejection blocks? You don't get the low you're looking for. We didn't get our 2 downside objectives we were looking for because we did not close below the lowest little imbalance. It literally tagged it, wicked down into the rejection block, and then lost momentum and bounced. That's a good example. That's what I want you guys to kind of look at later on and say, it can run all the way down here, tag this discount box, the lowest discount box, even wick through it, and still go higher. And everybody, you could have been thinking, that's definitely going for these 2 guys right here. Well, no, that's why you don't overcommit. You got to say, it's got to break this box. If it doesn't, then you can't say, well, it was close enough. It broke those 2 boxes. So it for sure was going there. No, the rule is it must break that one to get your range extension. And then it must come back to that for continuation, either the low, all those 6 levels I told you about. to go lower. And if that 6th level gets broken to the upside on a close, you're on the wrong side. Catch it. It's running back the other way. Because it's also a reversal model. Dovetail. They overlap. One protects you. They all kind of protect you in whatever direction you're going in. If you're on the wrong side of it, you're going to take a loss, but get back on the horse because you just got thrown off. It's going in the other direction. So they kind of dovetail each other. 4 simple models, man. They're not simple. There's a lot of rules to them, and they're very strict rules. Where are we at, Hadi? Talk to me, brother. What are we doing? Where are we at? Look at that. Smash. Oops. Nothing. I'm kind of excited. Can't wait till March. March, April, man. Getting some long-term liquidity investments. Looking forward to that. Live cattle. Poop the bed. We're looking for this guy right here. Look at that. We're looking for this mean threshold to hold price, or this little discount box right here, or premium box, I should say, to give us some support. Right there. On the 1 hour, inversion. See that? So we traded through, we literally cleared the tops, a couple of ticks, rolled over, change in direction, we closed below it. Don't even worry about the carrot right now because that ain't where we're going. We're now headed for a short, so now I'm looking for down here. This has got to close below here to aim for this. So right there, 50% of that is where it's hit. Now you're getting a reaction. So I'd like to see that come back up into here, into this candle here, or at best, just come back, tag that right there at 236.225, roll over, and then start heading for the carrot down here. Got to break this mean threshold here first, though, and then head for the carrot. In live cattle. Low swept, trade back up inside it, hit it, roll over, go lower, wait for this low to get taken, it closes below it, comes back up, tags it right there on that next candle. Look at this. I'm not form fitting this. See how we close below it right there? Sorry, this bull or bear candle right here. You close below it. This one literally came back and went doop. Just tagged it perfectly at 5063 and went lower. That's cocoa. Perfect data points, man. You want to talk about precision entry? If it's acting the way it should, man, I can give you some amazing detail. I can give you some incredible detail, point to point. Look at that. That one alone, when I gave you soybeans and it tagged that high, and look at the kick off of that. Literally ripped all the way through the discount box. ran all the way through the discount box right there, came back, tagged it for a continuation model. Oof. Full continuation past here. Remember, these are the new lows, not this one just yet. This one, low taken, and then you see that high. If we see a high get above here, then we're coming back inside this range again. Otherwise, retesting this, that's good all the way up into here. This is what soybeans can be kind of a, or this kind of setup can be really quite dramatic if you start digging into here. So this retracement can come all the way up into here and then go lower. Tag these old lows. If it does that, I want to see this close above here, use that as support and start pushing up higher into this range. That'll be in your 50-62% reversal. So look for an overlap now. Pull your fib tool from the high to the low. There's 50%. There's 62% right there. So between 50 and 62%, there's key levels that it can roll over and go down if we take that candle right there. Gotta close above it though. Otherwise, this is just simply retesting that level to go lower. And this could be a nice little those would be like targets I'd be aiming for the next level, next leg down. You reverse it so you can say how much of that leg has been completed. 10%, 25%, 50%, 65%. So you use the fib tool on the leg just to kind of use it as a way to go down. You can either use that as a scale up or revert. Oh, see how my brain's just come up with this idea? Remember the internal range liquidity hunt? If you do get a continuation leg down now, use the fib tool again as a continuation scale out on the way down. As soon as you hit 50%, so this is going to be reversed, right? It's got to do this. I got to make sure that was back in the same spot again. I just got an idea. This is a new rule. This may be a new rule. If that's the high and we're expecting the next leg to go lower, you scale out at 50%. As soon as it hits 50% there, move your stop loss to break even, pay yourself 62 all the way down to a full scale out down as the next leg down. So you use the fib tool. You guys just heard this. This is a new idea I just came up with. You use the fib tool to scale out your way down for a next price leg. Or you hunt for whatever your objective is over here. But that'd be an interesting way to... You just saw that live, you guys. My scaling out the next leg on the way down using the fib tool as a safeguard. I'm going to have to do a little research on that. The new scale out on the way down for the next projected price leg. How's that? Oh, my eyes are getting tired. Oh, I'm so tired. Do you like that? You guys like that idea or not? Yay or no? Thumbs up or not? Don't give me a thumbs down on the charts. Just give me a thumbs up on the sidelines if you like that idea or not. Anyway, I'm going to leave that there just because I'm kind of interested to see what would happen. Interested to see what would happen. Okay, so here's a good example. Price leg. Let's see if this would work. If I did a price leg from there to there and I said, look, the next price leg is going to go from that high down. Let's invert this. Let's invert this. Reversal. Okay. Now I want to see this, blow this up a little bit here. So if you were trading this, you came back in and you said, I want to short this off this reversal. This is the range extension. Now I've already got, or sorry, the continuation model. I've already got the extension. I just want to see the continuation now. So you trade back into this candle. You're looking for an extension. So if you trade entry 1, entry 2, you don't get an entry 2, you get an entry 1. So you got one entry here. You had a little bit of drawdown, and it started going lower. So that's my next price leg lower. Hit 50%, pay yourself right there. Move your stop loss now to break even right there. So your break even plus the cost of your trade. 62%. Now move your stop loss to 50. You've hit 62%. You pay yourself another 10%. That whole trade is now stress-free, and you still got the full rest of the leg to go. So as soon as you hit 70%, pay yourself, move to 60%. And then if it reverses on you, because any one of these could be reversals, right? That's the safer way to do it. But if you're just waiting for the reversal setup to happen, to come back, lows taken, SIBIs occurred, trade above it, come back to it, then go longer. You see how you can nibble your stuff out of here much quicker. So you can use take profit model 3. You can use reversal model. You can use this fib model. So I've got another model for range extension, leg extension model. Not model, but take profit plan when you get a leg extension. I like it. You heard it here first, folks. You heard it here first. It looks good. And you're making money. You're saving yourself. You're nibbling out of the market. You're like eating cheese and getting fat, man. I like that too, Reza. It's nice, hey? I tell you, sometimes my brain works better when it's cold. And like, I'm cold. I just want to go back to bed. I like that. I must write that down. Stand by. I'm going to write that down. I'm going to come up with the rules for that too. I love a good old fountain pen. I do love my fountain pens. So that's the new Take Profit Model 6, my friends. My Take Profit Model 6 is used in an extension model. That the Alberta in you, Darren. Ice in the veins. Yes, indeed. Mind you, it's plus 10 today. It's going up to plus 10. We got a nice Chinook in town today. Everything's melting. Everything's sloppy. Your car's got to get washed again. But it's all nice and warm out there today. So when I'm done here in the next half hour, look at that. Still holding that model. Look at how crappy that is for 11 o'clock. We still got the macro at 1050. We traded above it. You tap it all the way. Look at that. All the bodies respecting that fair value gap. And now you've taken that high out. Pay yourself. Move to break even. You don't want to see it come back down here now. That's got to go all the way up. Use your fib tool inside here. So we called this earlier. We wanted to see it get back above here, right there. Whilst I was babbling away over there, you get to see it right there. Tag it. Go higher. We're looking for 50%. There you go. There's your first payout. If you haven't already paid yourself there, pay yourself there. Move your stop loss right up to break even plus the cost of the trade. This is your bull trap broken to the upside. It comes back. Look at that. That one just closes above that bull candle. gives it a kiss, sends it higher, looking for 62% now. Let's go back to putting our settings back where they're supposed to be. It's not reversed now. There you go. Waiting for 62. Pay yourself at 62%, my friends. Pay yourself at 62. That's take profit model 1. And look at that. It's hit right into our level. Pay yourself there. Don't wait for 62. Pay yourself at the area we're expecting price to reject off of. Sensitivity. How many people wrote that new rule down for the leg extension rule? Write it down, man. I think I'm going to use that in the future. Yeah, we had some solid weather last couple. You guys have had some good weather out there in Vancouver, hey? Did you ever get to meet Baron, Lucas? I can't remember if you met Baron or not. Snow next week, though. Silver trying to break out. Trying? It's out, man. It's gone. Say goodbye. Say goodbye. Say goodbye. You broke the high right here, and you broke it right here. Upside, come back inside. Look at that mean threshold. Held it. Send it. Takes the high. Pay yourself. Move to break even. Zero stress trade. If it comes back, takes you out, who cares? It's getting into lunch hour. It can get all choppy as snot in here now. But pay yourself. Stop losses. Break even. Plus the cost of the trades. It doesn't cost you anything for this trade. And if the data points work, then it should leave. If it doesn't, then right there, you're out of the trade. And you paid yourself right there. Real quick and easy. Discipline. Don't get greedy and say, I've got to head for... Yeah. That's why you got to pay yourself. Pay yourself. Pay yourself, man. Pay the trader and protect your money. Nasdaq's got a 5-minute chart now, changing direction, showing you a change. See how we've got that? Now you're back into here. You're looking for a long now. So that's a scale in 1. So you could take 1 buy on that. And then you can put another one right there as a buy, scale in there. 1 right here, scale in here. Stop loss will go there. Those are the different scale in points. 1, 2, 3. Yeah, we got 1 anyway. What are we aiming for? We're aiming for right here, my friends. I just want the first part of my busy premium box. I'll take it up there. Just Carla and your dad. Okay. Baron lives and works in Vancouver, man. Great guy. You should, if you ever get a chance to go out for coffee with him, sit and have a chat. He's a great storyteller. Super interesting kid. Love that kid. So now we've taken out that high. Now you move your little stop loss here going, oh, I'm going to move him into a little bit of profit because I don't want to see this candle get taken out to the upside. Give me my premium box. I move to the sidelines. This is just 1 lot, but you know, you get the right idea. You're in zero stress. It's a zero stress trade now. You get $20. It's enough for a coffee in Vancouver. You get $1 change, but it's enough for a coffee in Vancouver. 76 Fahrenheit down here in Bahamas. Oh, Paulette, you're killing me. I'd love to be in the Bahamas right now. I could sit there on the beach having a margarita or a little pina colada or a Bahama Mama, and I could listen to you singing. How's that? I'd be like, all right. I get to listen to Paulette serenading, and I get to listen to a margarita, or listen to a margarita. I get to drink a nice margarita, Bahama Mama, and enjoy some nice weather. We can all dream, Paulette. We can all dream, my girl. Oh, I'd love it. I could convince my girl to come down there. We've got some big trips we want to plan this year. Carla turns 60 this year, so we're looking for we're doing Paris for her 60th birthday, and then England. And I love England. It's where I was born, so all my family's back there. And then Saudi Arabia and Egypt. I want to do some diving down there. I got friends. I got a guy who used to work for the military. He used to fly those fancy airplanes for the air shows and stuff. He was the lead guy. Then he's down there teaching pilots, and used to teach for the military. So anyway, he's down there in Saudi Arabia teaching. So he's there for till August. He's been there for 5 years. And then we get to go diving in Egypt. It would be kind of fun. And then I'm looking for some other adventures. So if there's some cool places, I'm coming back to England. So if Ollie is in here, Ollie, you and I are going to go for a little date at the pub. We're going to have a chat, have some laughs. And anybody else who's in England or Paris, if you're around there, let me know. Let's have a meetup. Let's have a chat. Have a coffee. Have a laugh. Tell me about your life. Tell me about your story. You should do a weekend training for your team down here. That would be awesome. I'd love to come down there. Paulette and I could be trading live, chatting, having a great laugh, enjoying some good food, some good friends, some company. That would be awesome, Paulette. Be careful. I might take you up on that. Get a bunch of your friends together that want to learn about trading. We'll sit down, do a little trading summit in Bahamas. How's that, hey? Do a little trading summit down there. You guys want to go for a vacation with your family? See, I'm out of my trade now. And we'll just wait for it to come back down here. That's cool. That's already in the premium portion of that range. So that's why you got to pull your stop loss kind of tight. Yeah, that'd be awesome. We had the Toronto Trade Summit last year. We could do the Paulette the Bahama Mama Summit down in Bahamas. That'd be awesome. Let me know. I can set it up. That'd be awesome. Gotta go. Thanks for everything, D. You're welcome, Abs. Take care, brother. It's an open invitation. Bless you. Thank you very much, Paulette. So I'm trying the box to box on the 15-second and 30-second chart. Ooh, girl, you going fast and furious. Good for you. 15 seconds. 15 seconds. She's doing her box to box. Oh yeah, okay, there's one right there. That's a perfect box right there to box right there on a 15-second chart. So if you got it, Paulette, there's the reversal. Body trades below it. You trade back to it. Perfect data point entry at 579. Short for first and second D1, D2. D1, D2. Perfect exit right there. Done and dusted. There's your box-to-box trade. Good for you. You got it. High five, sister. Yes. Good for you. I like to hear it. You go, girl. You go. I love it. On a 15-second chart, people. She got the perfect box-to-box on a 15-second chart. Ooh, yeah. Love it. Love it. Well done. Well done. See, who said you couldn't trade while sitting on the beach, enjoying the Bahamas on a 15-second chart? Hey, who said you couldn't enjoy a nice little trade? Paulette's like, I trade on a 15-second chart. I work for about 30 seconds for each day, and then I'm done. I like to kind of chill. I trade a couple of trades for 30 seconds and make my money for the month, and then I move to the sidelines. Paulette's one of the highest paid people in Bahamas. People say, hey, Paulette, how long do you work each day? Oh, you must work like crazy all the time. Well, you know, I like to try and get my work done in about the first minute or so after 11 o'clock. I like to work in about that. And then I usually get my work done, and then I don't have to work for the rest of the week. Yeah, that's about a minute. I like to work about a minute. All right, there's my next trigger. So we're inside this range here now, right? We're looking at this mean threshold. I don't want to see the mean threshold get traded. I don't even want this trade now. I've already traded into the premium, so this could be a big reversal now. And it's already 11:30, so it's done its run back inside this range. I'd like to have seen it cleared the high out. So stop loss here will now go just below. I'm going to put it at 50% of the. I don't want to see that 50. Actually, screw it. I don't want to see any more than 50% of this let go. So I'm going to be one tick below that last little candle right there. And it looks like it's going to run it. This could come right back into this consolidation, give you a CAM model 1 entry, which would be really frustrating because that would take my stop loss. If it's really strong right now, it's got to hold here at the 50% and kick off and go, go, go. So now what I do is I chase it. I go, I want to be right there now because I don't want to see that get any lower than that. So if it comes back and takes me out, even right now, somebody will say, oh, you're moving your stop loss too quick. Well, it's already done its little pop down here. I want to see this half this wick get hit here and then start going higher. I don't want to see it going down anymore. That's it. That's the bottom. That's what you're going to demand for your price, right? There's the wick. Go, go, go. Now, if it clears that bull trap, internal range liquidity, from there to there, 50% is what? It's right there. So as soon as it gets 50%, I'll move my stop loss to break even. I can't take half off because I only got one on anyway, so. This could be an institutional order flow entry drill. So we've traded above that level. Now this is what I want to see hold right there. See how that candle's been. I want to see this candle provide some support now. And I don't want to see an institutional order flow entry drill. I want to see that just keep running higher. Yeah, baby, there you go. Now, cost of the trade didn't cost me anything now. It's a freebie, and I can't take my trade off there at 50%. Because I've only got one on there, so it's going to come back and take me out. Now, Hidi would have taken that one there and said, hey, look, I'm taking my 50% right there. Even if it's one, I'll move to the sidelines now and wait for the bull trap to let go, right? because I threw away $30 just to end up taking 8 and whatever it costs you to take the trade. The decision you have to make when you've only got one left on there and the 50% gets hit, you say, that's good enough for me, man. I'll take my money and run. Now this can come all the way back down into this little guy right here and tag me out, which it just did. Watch it come back into here. One, 2, and 3 at 531. You don't want to lose 530. Look at that, hit that 50%, eh? Just enough to take me out. Right. Higher. Now, if you're saying to yourself, ah, damn, and you're getting yourself all worked up, who cares? Who cares? We got a $7 coffee. That's good in, I don't know. You could buy a coffee in Canada for that for $7. Because there's plenty of opportunities coming, man. Plenty. So, and we're getting into lunch hour now. So, have a great day. See you tomorrow. Looking for 360. Not long for me. Looking 15-minute chart, but anything can happen. Anything can happen. 15-minute, hey? What do you got there, Hadi? The man's a wizard with the 5 and 15-minute charts. Wizard, you're a wizard, Harry. Yeah, you're inside the bull trap. You've got this level right here. And we still haven't hit this down here yet. So Michael says usually at 11 o'clock it makes a run on the most recent run before 11 o'clock. And that's the most significant recent run. So I'd like to see it run that out. It hasn't come back to this premium box on the 15 minute showing you a long right here. Oh, sorry, that's 5 minute. 15 minute hasn't found any longs yet. You got to get through this level right here, which is also the mean threshold. So if that closes above that, on a close here, comes back, reaccesses this, then we're looking for a run on that high. So now you're looking for that mean threshold again. Watch the mean threshold here. There's no reason it should come down here. So now I'm thinking I like this box down here. This one and then this one. I see you, Hadi. I see you, buddy. That's coming right back into this order block. And it's reacting off of that. So it feels shorter for sure. 5 minute doesn't. 5 minutes says we're going longer because we've broken this. We're coming back inside the SIBI here now in a 5 minute. So SIBI says 5 minutes is longer. 1 minute says shorter inside this range because all we did was come back. We broke below this SIBI here or BISI, traded back into it right there, and then rolled over and come lower. So shorter, longer. We break through here. Now we're getting shorter on the 1 minute, shorter on the 5 minute, and confirming on the 15 minute that it wants to go lower. Oh, there is one right there. Okay, so right there. There's your 15 minute. I wasn't even looking at that. Right there. That's the 15 minute one. Right there. Wait for 1 minute and 42 seconds. If that just goes, boop, comes down, tags this, shoots back up and closes inside here, we're still bullish on a 15, bullish on a 5, and wait for this to break this structure here to go higher on a 1. So bullish, turning bearish, bullish, still bullish, and that was bullish, turning bearish. So you got to wait one more minute, see where this ends up on a 15-minute chart. If it does, now that becomes my area of retest. And that can come all the way up into this candle right here. So that's our go, no go zone right there. Go, no go zone. Anything can happen. And you notice how that would be the bull trap. As soon as we break through that, come back to the no-go zone and run it. 13 seconds. That's it, man. That is it. We've got confirmation on a 15-minute that we're changing direction. But anything can happen. Look at the hourly now. Hourly's just shy of tagging that, hey? It still came back and tagged the old low there. Perfect. Yeah, I see that, Hadi. Tag that old low there. Nice. This was a nice little hit on the old low that occurred over here. Right there. Nope. There's another one down lower than that. Nope. There's another one lower than that. Right here. 569. So 569 was right here. It came back in, tagged that back there, rolled over and came lower on the hourly. Now the 15-minute is failing. The 5-minute is failing. And the 1-minute, we've cleared out this downside now. So now you want to see this come back into here. And be careful, 12 o'clock, we could just get a run on liquidity and send it right back higher. The smart thing, this is where you'll typically see Hadi will exit for the day, is the lion's share of the run is done in the morning, and you may see afternoon stuff happening. So here's a retest right here. So now I want to see this hold price, and I want to see a new range extension over here. And this would have been in the continuation, so I want to see the continuation occur down here. As soon as it takes that low out, I'll move to break even. What do you got looking for the hourly? I'm done for 2 this morning. Have great days. Thanks for the knowledge as always, Darren. You're very welcome, Lucas. All the best, man. I'm bearish to 360. Unfinished job down there. There you go. Now I'm going to move to break even plus the cost of the trade. So pay yourself there. I've got 2 on. I'm not going to pay there. I'm going to go lower. So I'm just going to leave my stop loss there. It'll be $6. A cheaper coffee, but a coffee nonetheless. Now I'm looking for an extension model here. This is a continuation model here. So now we've taken that low, albeit small. It's still a continuation. I want to see that just get some steam now and start really accelerating through here. You should actually just follow the rule. Pay yourself 1 there. Pay yourself 1 there. Now you're zero. You've paid yourself $50 and the rest is going to let it run. So that's the rule. Pay yourself and let it go. Thanks, Don. I'm also done for the day. See you later, Reza. I'm out of here as well. It's 10-2. That's it for me. Thank you so much, everybody, for tuning in. I hope you enjoy your day. I hope you got to learn a little something today. I hope I passed on some knowledge for you. Again, all free. Nobody's here to try and make any money off you. I just want you to be successful. I want you to find some joy out of life that doesn't involve money. I know money makes the world go round right now, and it gives you some freedom. And that's what I want you to have, is I want you to have your freedom to enjoy the things that really, it's not about money. It's about the people around you. It's about the family. And believe me, as they get older, you want them around more. And when people are sick or people are coming to the end of their life, you cherish them that much more. So please be kind to each other out there. Take care of each other. I wish you all the greatest of success, everybody, and I will see you bright and early tomorrow morning. Thank you again for all of you who sent some love from my mom. I'm going to call her and find out how everything's going on there now. And like Hadi says, man, let's go for 300s. Go for the 300s now. We're well into my first fair value gap of the year. It's been a delicious little run today. I hope you've enjoyed it. Thank you for tuning in. I will see you bright and early tomorrow. Like, notify, tell your friends. Let's help each other out here. Let's see if we can't get 2,000 people this year. All the best to you, and I'll see you tomorrow.